Hi guys, this is Dan from the Investment ABC, your guide to financial freedom. And in this video, I want to talk about Gamestop, GME, that is in the news everywhere currently, and what its astronomical price increase means for the broader market. The stock went up from the $10 range in November to currently $347 in just 2 months. How is this kind of movement even possible? The answer is a short squeeze, which happens when short sellers are forced to close their position. When you short, you lend a stock from your broker, sell it in the market, and anticipate the stock to fall to buy at a lower price and return the shares to the broker and pocket the difference. Shorting is nothing unusual, and we can see it in almost all stocks. The danger with shorting a stock is that the potential loss could be infinite if the stock is increasing against you for some reason and you're not able to close your position. In the example of GameStop, the shorts made a huge mistake. The number of shares being short surpassed the amount of publicly tradable shares, the float of the company. Currently, the short float is around 140%, and the stock price is around $347, which indicates to me that the stock has more room to run to the upside. The problem the shorts have currently is that they are desperate to close their positions, but there aren't just enough shares available on the market. And since they're desperate, investors who are long and other speculators, and in this case, a horde of retail investors from the popular site Wall Street Bets, are taking advantage of the situation. Normally, the stock goes higher and higher until longs are willing to sell their shares again. Just simple and supply and demand. What makes this short squeeze epic is that social media is spinning the situation as a war between big hedge funds versus little retail investors, kind of David versus Goliath. If we speak in pictures, it seems like David has Goliath by the balls and squeezing very hard right now. It is not only social media and emotions that are encouraging longs to hold their shares, but also the Avengers of finance, Elon Musk, Chamath Palihapitiya, and legendary Cathie Wood with their statements. Elon Musk's tweets are infamous, and his single tweet Gamestop helps the GME stock to take off. Chamath jumped onto the bandwagon and tweeted that he bought GME call options, and Cathie Wood gave a price target of $4,000 for GameStop. How on earth will retail investors who have no clue about valuations ever sell before a $1,000 minimum price target? This reminds me of poker, when a noob enters a round of professionals and is playing every hand and keeps winning and winning just out of luck until the professionals start to foam and swear. Two hedge funds burned in this short squeeze are Citron Research and Melvin Capital Management. Melvin, which is thought to have seen at least a third of its capital wiped out during the last week, is reported to have received a $2.75 billion bailout from two other hedge funds. It was reported that these two hedge funds already closed the position, but I'm not sure if that is really the truth, since the short interest is still very high. If the stock price continues to climb higher, there is a slight possibility that some entities might go bust and trigger a small Lehman event, which could crash stocks until the Fed steps in again. Even if that is not happening, hedge funds could be forced to liquidate other long positions to cover the losses. It is not only GameStop that is rising, but also other shares that are shorted heavily right now. Bull markets don't die of old age, but of euphoria, and the biggest warning sign is retail investors flooding the market to turn rich quickly. I doubt that the market topped right now at this point, but I think the market is due for a bigger correction before more stimulus can pump it higher. If we look at the chart of the S&P 500, we can see that it was forming a rising wedge pattern and a correction was likely. This, together with a potential hedge fund bust due to the short squeeze, led me to buy a put option on the S&P 500 yesterday to hedge my long positions in the market. Furthermore, it seems like to take longer for the economies around the world to reopen again than most investors have thought. We might be in lockdown mode the whole year, and the only thing which is keeping this market up is the trust and the power of the Fed and easy money. Investors need to be really careful not to get sucked into complacency when the markets are trading at sky-high valuations according to most fundamental metrics. most of the time it is exactly at that time when a black swan hits the markets. So invest carefully, guys. Everything I say is my own opinion and no financial advice. Since I'm no financial advisor, always do your own due diligence. If you like this video, hit the like button to support the channel, share, comment, and subscribe. Bye guys, and see you in the next one.